Hello guys, today I want to talk about liquidity and liquidity sweep. So basically what liquidity is where people's stop losses are resting in the market. So like as you can see right here we have this high, we're gonna draw this line here, and yeah, this is where people's stop losses are resting. And what price wanted to do? Price uh, usually want to take this stop losses of these people. So people like price want to sweep this this high, and when we gonna sweep it, either with close of the candle or just the wick of the candle, then we usually get retrace and deliver lower, or we don't have to retrace and we can keep continue up for more buy side liquidity. So yeah, that's pretty much liquidity. And yep, we have like a swing high and swing low. Swing high is like a most recent high of the leg. You can see. Let me show you. This is the leg. This is the whole trading leg, and this is like the swing high, and this is oh sorry, this is the swing low. And the same appears on or the same, like it's a little bit different. What is inner high? Inner high is like when we create the high inside the trading leg. So like this is the inner high, and this is the inner low. Like it's inside the trading leg, the whole leg. So yeah, yeah, that's like a liquidity and liquidity sweep and highs and lows. So this is the like the basics. So like as you can see, we have this this low, this inner low price gonna sweep this sell side liquidity, and what we're gonna do, we're gonna deliver higher from this sweep. So that's the liquidity, like price sweeping this liquidity and reversing from these points in the market. So yeah, and we have like a more examples of liquidity. This one was like the basic one, and this one is like a little bit more advanced, but it's not like, yeah, it's not like a hard or something. You will get it. uh we have a low resistance liquidity run and high resistance liquidity run. What that means, this is actually just a trend line liquidity. Trend line liquidity is when we can draw in a perfect trend line like this. So as you can see, price is moving up, creating higher highs and lower lows, and we're trending up. So uh as you can see here, we're trending up, and now we can draw a perfect trend line like this. So that means that people stop losses are resting below in this point at the market. So what price gonna do? Price gonna usually at this point price gonna reverse and gonna sweep uh these liquidities. So yeah, like usually how I said, price want to sweep this liquidity and fill the stop losses of the people who like a longing from this trend line. So usually when we have like a stacked up liquidity, right, like here, that meaning the low resistance liquidity run, um, we wanna sweep it. And the same appears for the high resistance liquidity run, that as you can see, we creating uh, lower lower lows, higher lows, higher lows, lower lows. So we are trending down. That means we can draw a perfect trend line, like you can see here. At and what is here? There are people stop losses. That means that the price gonna want to sweep this. So we should reverse and sweep this liquidity. So yeah, that's the trend line liquidity. It means like the people stop losses are resting here. So when you can draw a perfect trend line, price usually uh reverse from this downtrend and gonna sweep this liquidity. And the same appears on the low resistance liquidity run. So yeah. And the next one, we have equal highs and equal lows. Pardon me. Equal highs is basically uh, when we can draw a line and the price tapped into the same area more times. Uh, for equal highs, it's like 2 times, or we can have like a triple equal highs, quadra equal highs, penta equal highs, etc., etc., etc. And yeah, it can go on and on and on. And the more of them they are, the stronger they are. So yeah, when we have, for example, triple equal highs, like this, it's much stronger than normal equal highs. And when they are farther from each other, it's much more stronger. Like if you can see, this one is not that strong. Like when we have like uh when we have it like this, when they're like each high is like farther away from each other. And the same actually war the same works for equal lows. So from when they are much farther from each other, the stronger they are. So yeah, and the higher time frame, the stronger they are as well. So for example, when we have 15-minute equal highs, that means they are much stronger than the 1 minute equal highs or the equal lows. So that's equal highs and equal lows. You can use it as your take profit or as your confluence to enter to the trade, because uh price wanna target these points in the market. So yeah. Then we have data high and data low. As you can see, we have three red folder news at 8:30 a.m. New York time. So we're gonna go to the market on the 1 minute time frame. We're gonna wait when the 8:30 candle will close. Then we will mark out the high of the candle and the low of the candle. That will be our data high and data low. These are so strong draw on liquidity as well, uh, because price is actually targeting and sweeping them like almost every time. So yeah, when you get your entry, uh, and when you get your entry or you wanna enter a trade, this can be as well your confluence why to enter the trade, or your take profit for the trade. And usually you wanna like see one of them get swept so you can target the next one. So let's see, let's say we're gonna swap this data low, and now I'm gonna get my setup for the data high. So now my context is, okay, we swept the data low, where we should go for the data high, and I got my setup, so this should, there is a higher chance that this trade will work out. So yeah, so that's a data high and data low, pardon me. And now we have session highs and lows. As you know, we have Asia session, London session, and New York session. And usually this session like sweep after each other. So New York session, sweep London session, sweep Asia session. So I am a New York session, New York AM session trader. So I trade New York AM session because there is a most volatility in the markets in these times. So I'm gonna mark out New Asia high and Asia low. Uh, I'm marking out from the midnight to 5 p.m. New York time, and London high and London low. And that I mark out from 2 a.m. New York time to 5 a.m. New York time. So yeah, these are really strong draw on liquidity. Usually Asia is swept by London, but it don't have to be. We don't have to like swap Asia high and Asia low in London session. That's why I'm marking them out and looking at it every day, because we can swap them after in the New York session. So yeah, that's this one is really good. Draw on liquidities, just mark them out, and you will see on your own when you look at the charts. They are like literally magnets, especially the London high and the London low in the New York session. New York session really targeting London high and the London low. So yeah, I'm really like to using them. You can use them as well as your confluence, as your why to enter into the trade, uh, and as your take profit when you in the trade. So yeah, this is like the all the liquidity I knew that is in trading in the markets, and I hope this will help you. Just maybe one person will look at this and just like be happy that he see this and I could help someone out. So that means really a lot. And if you need any like if you need any help, any questions, you can just let me down in the comments, and I will try to respond as soon as possible, or just let me know in the Discord. I'm pretty active here, so if you need any help, just let me know. And good luck in the markets, good luck in the trading, and I hope you will make it. See ya.